Well, today is the 27th of June, 2012. It is that of a Wednesday. Let's take a look at gold, the gold to silver ratio, and a quick look at silver as well. Not much within this chart that I want to go over. Maybe that of a symmetrical triangle to start off with. Still a decent amount of time before it comes to its conclusion. You've had two tests amongst this Fibonacci level, but it did manage to match the previous low. This thing is getting extremely choppy in my point of view. Definitely not worth making any wagers, just simply looking at this in itself. If you are waking up to how currency is created, you have no gold, you have no silver, or very little, I think there's amazing opportunities available. If you've been buying for quite some time and you're waiting for the next big break, I think you got more time where you could wait, although I could, of course, be wrong. There was a double bottom formation in here. A double bottom is where you go down and you pretty much have two equal levels where you go down, then you come up to this level, and then you come back again to it. So therefore, within this one in here, this was the neckline, the bottom, the neckline, the bottom, and then the neckline again. But it didn't do too much. The double bottom formations, well, I can usually do a matching pattern, and the matching pattern for this gave me a price objective up to pretty much the Fibonacci high of 1685, and it didn't do that. Now the new double top is this one in here, and 3 days ago, or just this period here, 4 days ago, it hit it by exactly, 10 cents below, so pretty much an exact matching pierce. Since that point, there's been 3 days of just barely going below these highs, or just trading sideways, not doing so much. Well, it's not a bullish pattern. If anything, it is bearish to say the least, but everything's getting so choppy, I wouldn't play too much upon it. Let's move on now to the gold to silver ratio. This is a 280-hour chart. Every hour on the top of every hour, my computer calculates what the gold to silver ratio is. And that's a simple calculation. It's the price of gold divided by the price of silver. That's it. So this will take us back to 2008, which is really what I want to do. I want to go to the highs on here. This was when silver was $8. This is when gold was $700. And then this low. This is when silver was about $50 and gold was about $1,500. Well, since that point, gold has, well, I guess it's barely went up. It's went up just a little bit, maybe a few percent, where silver has, well, lost half its value. And overall, this gold to silver ratio in the past was at a 16-to-1 ratio, and it should never stay around the same anyway based on supply and demand of each metal. However, we are encountering, and we have been encountering our whole lifetime, a toxic method of trading these metals. So to say that 57.87 is the true gold to silver ratio, to me, is absurd. But because it's a toxic way of trading, then why can't it continue to trade how intoxic methods are traded? Now, as far as this pattern is concerned, I'd be extremely surprised. I'd still be extremely surprised if it has a clear breakout above this Fibonacci level of roughly 59-to-1. But it is test number 3. More often you test it, more likely you take it out. Not only that, but the last previous low was like around 48. So even if it comes back down to this average and the 52, 53, even 51 level, and then comes back up, then the pattern is just going to be extremely strong for wanting to take this level out and then move into the previous range that was endured as before the big silver breakout, of course. And that would also tell us that if it breaks below it, the move going from here to here is that of a failed move. But overall, I haven't talked about the more longer-term gold to silver ratio. It's been nothing more than failed move over failed move anyway. So I guess that would be too much of a surprise. Let's move on to silver. And we'll start off with the daily chart. And just like gold, it's at the bottom part here, just doing a whole bunch of sideways nothing with the lower 18 average. And 26, pretty much flat, is that huge level because the odds that you have big, fast moves breaking below there is really good. When this thing will finally bottom and have significant higher highs, higher lows, very difficult to say, but at some point it obviously will. Let's move on now to the 5-hour time frame, and this thing is getting extremely choppy. And just a little bit of a mess as far as that I'm concerned. After this move yesterday, or not yesterday, a couple days ago, I guess, to have this fast breakdown and then just going sideways. In fact, this previous candle here that's going on right now, it's kind of wild. Let's take a look at the 1 minute time frame because of it. This is as of 14:24 GMT, which is also 10:24 Eastern Time and 7:24 Pacific. From this major low here to this high, well, the price moved up in just a short period of time, quite a bit. It moved up about 80 cents or so, which is a move of over 2%. And just even from point A to point B, these two big green candles, the price movement was a gain of like 1.5% or so in under 120 seconds. But what's interesting is how the Fibonacci retracement is playing in. For the first time it got there, the first level, which is 2710, this candle in here, it hit it and then came back up. But then the next period, it progressed to continue down further, and then for a good 15-20 minutes, this area was a level of resistance rather than that of support. So breaking down below this line, I'd be saying, yeah, we're going down to this level here, and that's exactly where it bottomed out. Not near it, not a little below or a little above it, but exactly at it. And then again for a few minutes, it encountered this level of resistance at this Fibonacci line. Ballpark, when I see this type of pattern, what I'm looking for is I'd be looking for a move back down just a bit above it or exactly at this level, and then start to bring some momentum forward and at least make a test towards this previous high. This is just going over the chart analysis, which is one of the reasons why I'm showing these shorter term charts, because I bring different looks every single time I do videos, because a lot of times on the shorter term time frames, the setups, of course, will continuously change over and over, to say the least. And that'll be it for today, and or at least for this video. It's unlikely I'll put another one out, but possible. And have yourself a great day. Bye-bye.